Good morning, everybody. Let's have a look at these Bitcoins and these stocks on a Tuesday. So yesterday we did see that move. We saw a move up to and just a wick above that 200 simple moving average on the 4 hours. So this is the thing that we were getting, well, I'd say concerned about. We were wondering if we were actually going to see a breakout or a breakdown. We had a symmetrical and a descending triangle formation formed within here, which was basically your Bollinger Band center and your 200 simple moving average. And basically what we saw is a move up to the top of the range and then back down again. We're getting support on this 21 exponential on the 4 hour at the moment. 1, 2, 3, 4, 5 in a row, which means that we're still going to be battling in these short-term moving averages on the 4 hourly. So you can see that the Bollinger Band itself, the 20 simple, is being battled with at the moment. That comes in at 63,700, and obviously the top of the range yesterday was the was this box, which is ever so slightly above that. So remember what we said yesterday, and it's still the same today. Look, we'll see a change of behaviour when you get back above all the moving averages of significance. Basically, the 200 simple moving average, which was the death cross retest over here, which led to the lower low. Now we've got what looks like a lower high, basically, and is this going to create a lower low again? It doesn't have to, by the way. It really, honestly, doesn't have to do that at all. But at the moment, there is no breakout. So until we see a breakout, we don't have a change of behavior. The behavior remains the same, which is a consolidation. Does it go to a new low? I couldn't tell you. I would expect it to, but it doesn't necessarily have to. The only reason I'm thinking it might not is because if we turn our attention over to S&P, for instance, we broke out. So S&P didn't have a problem with its 200 simple moving average. You can see that here. So it was battling it as resistance and it actually broke out. Now the difference between the two is this. This might be what leads to further downside today. Might be. And again, the operative word being might. It's only one. It's a relatively simple read. So we've got the money flow index, which peaked over here, and it's peaked over here significantly actually at 96. Normally, this isn't a get out or anything like that, but if you were looking to try and sort of buy lows, sell highs, on I suppose over a daily basis or whatever, if you ever get a read on any time frame that suggests the money flow index is hot above 90s, but certainly above 95, you would probably not want to take a position on that, or at least on that time frame. So again, this is a 4 hourly time frame, which is an intermediate as far as I'm concerned. 4 hours can offer decent moves, and they can translate into dailies and weeklies and monthlies and yearlies and millenniums. And, they can translate to higher term time frames, is all I'm saying. So if we have a look at what happened on the last few money flow index reads of such size, they more or less did mark relative, I wouldn't say tops, let's just call them peaks. I'm not saying tops. This is only a 4 hourly, so let's not go mad. But the last few times we got these big reads, we had this one, which led to a pullback. It wasn't massive. It was at 1%, and then we had a bearish divergence, which marked the absolute peak, which is always the best way to try and play any momentum oscillator down here. So we've got bearish divergence after a money flow index peak. Then over here, what we did see was another peak as well, and we got another peak, which this one was particularly high, 95, and again, baby step really, pullback of 2% as a result of being overheated. Went on to a higher high, higher low. So we did get a pullback of 2%. So we're getting that now. I mean, this is a overheated money flow index on a 4 hourly, definitely 96.6. So if we were thinking about maybe a pullback, maybe into a golden cross retest down here on the 4 hourly, because it looks unavoidable that we're going to get a golden cross on the exponentials, which is good for the S&P. This is a good sign. And normally you'd expect to pull back into that as well, to test its strength. Just like you'd get retests of death crosses to test their strength, this one has not been particularly strong. It's broken. So S&P looks like it's good to go in a way, but yeah. So we've broken out. Now are we going to get a retest? If we are, obviously a retest of these areas down here, 5,100 would be significant, because if we can hold that, that means that maybe the downtrend is finished, the low is in, and the downtrend will be finished here. But what we want to see is a retest of this, really, to see that. Just like you'd want to see a retest of this to see if we were bearish. We're not bearish here, but we are overheated. Pull back, retest, higher low, back up again. That's kind of how it looks to me. That's kind of how it looks to me. Now, obviously, for the record, I had some short positions that I took on this level here, because that's how you play these charts, you see. This is how you do it. You short either a resistance or you long a support. So, yeah, I shorted the resistance, it broke, stopped out, failed trade. You know, what could I say? You know, I'm not perfect. I am only human. But that is an appropriate thing to have done, and so would be stop losses, which means that I did lose a little, but not much, because the beauty of things like this is it doesn't take long to know if you're wrong. It didn't take very long at all, and now you can see we're moving up. Now, as much as I do think we're going to be pulling back into this area, or I would like that, the reason I'd like that, do you know why I'd like that? So I can long it. That's why. So I can long it. Because I won't be longing anything, you know, unless I'm at a support. So that's the next trade setup on the S&P. But what I'm looking at now is a potential for a pullback down into that area. So if S&P does decide it wants to pull back into that area, it's a 1.5% move, which isn't much, but you'd expect that to be transposed onto the Bitcoin chart, which is at the moment getting rejection, or struggling, should I say. I wouldn't say rejection, but it's struggling with the 4-hourly Bollinger Band. Now, this isn't a bad chart, I have to say. It's not a bad chart at all. It's not bad. It's really not that bad. We are still fighting with the daily areas. So we came down yesterday, big move down, to be honest. You know, yesterday's rejection was quite nasty. 4.3%, but we managed to close back above that 10 exponential where we were supported from. Today we're above the 21, the 20, the 10, just getting rejection on the 50. So it does look like there is a chance, to be honest with you, there is a chance that the low is already in. And all I'm saying is that given the read that we've got on the S&P and the potential setup for a pullback into that, you would imagine that we do pull back with Bitcoin also. But if we don't, no big deal. We're still waiting for the confirmation of the breakout, which for me would be above 65, closures above there, retests of it, just like what we've seen with the S&P. That would be more or less confirmation of a breakout, just a little bit further to go. So we've got a lagging chart here on Bitcoin. The leading chart is the S&P, and the S&P is showing signs of life. But if it does pull back, then Bitcoin will pull back further. It's more vulnerable to downside, considering that the relationship to price action, moving averages, supports, resistances are not the same as S&P, so it does make this more vulnerable, and will emphasize anything that the S&P does. So if the S&P does pull back by 1.5% into a bullish retest of the golden cross, then you would imagine that because we don't have any golden crosses on this chart, that we would probably fall down a lot further, probably dipping our toes into maybe just around the $60,000 zone, maybe not lower than that, and that would cause a higher low on the 4-hourly, which might feel a bit more. We might feel a bit more confident that the low is in at that stage. So let's have a quick look at some of these other charts then, shall we? Get rid of this. We'll have a look at the total 2. What's the total 2 up to? So on the 4-hourly, it's worse than Bitcoin. I don't know. It's probably not the right word to use. It's not as good as Bitcoin, obviously. Lagging behind, getting support on the 50. If you lose this and you do come down further, probably be looking for supports around 982 billion. So that's fine. There's nothing special about that. So have a look at the Bitcoin dominance chart. So the Bitcoin dominance chart here is breaking out. So we've got our golden cross here now. So this does look like it wants to go up. So Bitcoin is going to be the leader, whether you're bullish or bearish on it. Altcoins as a whole generally don't look like, or they're not positioned at this point now to actually be better than Bitcoin. So Bitcoin's still going to be the leader here, which is unfortunate. And again, you're going to find altcoins that don't conform to that. Obviously, there's thousands to choose from, and some of them will do loads of percents. Most of them, based on what we see here, will lag behind. So the dominance chart is positioned to break out. And look, this is price neutral. Just want to put that across. We could dump. The market can dump. This will go up. The market can pump. This will go up. This is looking like it wants to go up. The consolidation is over on this one now. What else do we want to look at? We'll have a look at the Dixie to see how that's behaving. And actually the Dixie is reclaiming on the 4-hourly some major ground. So it's getting back above moving averages of significance. And although we did lose the trend line and we lost the horizontal and we were rejected, well, it was a fake out, wasn't it, really? We're picking up pace. Bullish divergence leading into probably a move up on the dollar. So I am skeptical. I have to say I'm skeptical about what is going to happen today, tomorrow, this week. I'm skeptical. Mixed signals is all I can say. There's mixed signals, mixed setups. There isn't a confirmation of a uptrend. There's not a confirmation of a new low forming. If anything, what we're going to do is we're going to see this range sort of get smashed out a bit, really. Bulls get waxed, bears get waxed, because the setup and the trend isn't particularly clear. There's enough evidence, I would say, to suggest that the low is in, but not enough for me to go, full on crazy, because look, markets, love it or hate it, can be slow, right? It can be slow. I know we all want to make loads of money really fast, but sometimes you just do have to be cautious and careful. Some altcoins have come down dramatically, 60-70% already from their highs. Doesn't mean that that's it, They can come down further, they certainly can. But if you wanted to buy the dips or start to dollar cost average from these areas, that's also fine. It's completely fine. I think for me personally, I've got a lot of skin in the game when it comes to my hodl bags. When it comes to my trading account, I'm still looking to keep a lot of it in cash. I know it sounds boring as well, but if I can establish a trend, and if I can establish a decent setup that I'm comfortable with, then yeah, I'll deploy loads of capital. At the moment, if we're just going to fanny around in this little 4-hourly area where we haven't confirmed a breakout or a breakdown, it's a small range. That's not what I'm in crypto for, is it really? You're not in crypto for a small range. You're in crypto for a big move, right? And I don't see a big move taking place from the information that I've got present on the charts, nor do I get that sort of feeling, especially today with the S&P potentially pulling back into a bullish retest. So like I say, I want to, and I really do want to get back into these markets and position myself appropriately, and then sit back and relax and continue to play Shogun 2 Fall of the Samurai, which is unfortunately what I found myself doing throughout the day at the moment. But I can't, because I can't justify it at the moment. I can't justify large positions in altcoins or anything like that. So I'll just allow for the hodl bags to continue to run, and I'll just sit and wait patiently, really, for what I consider to be a better time to go mad on altcoins and crypto. I'm looking at the charts now, thinking that maybe this week we will get either a nicer pullback that forms a higher low, or we break down and continue to make lower lows, which is also fine as well, because that goes into what I think is more likely generally, although it's going to be boring to sit here and speculate that, because we're looking at weeklies, really. We're looking at weekly timeframes. We are turning down still on the weekly, and this is the thing that's going to frustrate a lot of people. Is that when you're looking at a weekly, it does take a while to play out. That is a problem. For a lot of people, the patience, they're having to sit and wait and watch. And so you turn your attention to a 4-hourly, or even worse, an hourly, and you get the false impression that, or misleading, should I say, impression that Bitcoin's actually okay, and it could be okay. It really, honestly, it could be okay. But for me, momentum is still coming down, and because momentum is coming down, it might mean that price will follow it. This is the thing about momentum versus price action. Momentum is like the leading indicator, if you want to think about it like that, to what price might then become. So price action at the moment is holding on, and that's fine. Whereas momentum continues to fall, and it's trying to think of an analogy. What's the analogy? I don't know. I can't really think of one. It's too early, really, for an analogy. Like, I suppose, like I don't know, maybe like a hole in the side of a dam, you know, and the momentum starts to, you know, push the water out through the hole, and then it erodes the hole, and bit by bit the momentum picks up, and then before you know it, it all comes tumbling down. So it's not a very good analogy, but it's the best I can come up with today. It's a bit like that. So this is normally going to be like a leading indicator, seeing the money flow index, the MACD, the RSI continue to dwindle with its momentum. It points to the price action following a little bit later. But I just, you know, I don't think it's going to be chaotic or catastrophic. I really don't. It's just going to be a continued consolidation. But if the stocks have decided that they don't want to come down, that's fine. I just feel like in the short term, as of today, I think they probably do want to, but that would only be a bullish retest. If we lose all these moving averages down here, so if we start to close 4 hourlies, and I mean close 4 hourlies below, you know, 5,080, then maybe we are making our way down to a new lower low. But at the moment, you know, I would imagine that considering we've got the breakout, we either get something like this, pull back into the to the breakout area, or I'll pull back into this moving average down here, boosh, and then up and away. But again, validation, invalidation. It's, you know, that's the beauty of trading. You know, I'm telling you what I think is likely to happen over the next few days. But things can change, and this is why, you know, as a trader, which I'm hoping you guys are watching this and thinking, oh, let's adopt some of this. You know, let's think about what he's doing. He's doing something that seems to be working. There's the strategy. There's a thought process here. This isn't just someone just saying stuff for this, you know, sensational clickbait. You know, there is something going on here. This guy's trading for a living. How's he doing it? This is how I do it. But rather than have you sit next to me all day, every day, and focus on charts and me say, oh, look, something has changed. This is what this means. I make a video in the morning. Maybe I'll make a video in the afternoon sometimes. But things change. And the dynamic is currently that's the setup. This is it. This is the setup that we've got. It's not great. You play the cards you dealt, don't you? Really, you know, you've got no other choice. So you play the cards you dealt. I've been dealt these cards at 8:20 in the morning, and so I'm going to have to play my hand, aren't I? At some point, and the hand I'm going to play is I'm not going to go all in. Trust me, but I will be thinking about buying and longing down here, and maybe even longing here as well. Right, thanks for watching. Hope you have a nice day. Take it easy.